The Ghost Network connects centuries of hidden power. Who holds the key to centuries of control? The architecture is everywhere, if you know where to look. There is a building in London. It has no windows at street level. It sits on top of the largest gold vault in Europe. And for 330 years, almost nobody inside it has ever explained publicly what decisions get made there. This is the story of the Bank of England, not the official version, the architecture underneath it. 330 years of hidden power. This is the architecture of capital. Where did it begin? In 1694. A royal charter, a pivotal moment. Here is a question nobody asks. Why does any government need a bank? The answer, almost always, is war. And in 1694, England was losing one. King William III needed to regain the broke, its credit destroyed by years of borrowing. Already said no.
King William III needed to rebuild the Royal Navy, urgently. He needed £1.2 million. But the government was broke, its credit destroyed by years of borrowing it couldn't repay, and every private lender in London had already said no. Into this crisis walked a Scottish merchant, William Peterson. His elegant and 200 franc private and gummet. The government got its money within 12 days. The investors got a license to create money. Into this crisis walked a Scottish merchant named William Peterson. His proposal was elegant and radical. Let 1,268 private investors lend the government the money it needed, pooled together as a single institution. In return, the institution gets the right to issue banknotes, earn interest from the government forever, and call itself the Bank of England. The government got its money within 12 days. The investors got a license to create money. The deal was done on 27 July 1694. But here is what the history books skip. The bank was not a public institution. It was a private company. The bank had a problem almost immediately. Its paper notes were worth only as much as people trusted them, and trust in 1690s London was not easy to manufacture. Within months of opening, counterfeiters began copying the bank's notes. The bank's response was swift and brutal. 300 people hanged for copying paper. That tells you everything about how seriously the Bank of England guarded its monopoly on what counted as real money. But counterfeiting was only the visible problem. The deeper problem was the bank's own weakness. It promised to pay gold on demand for every note it issued. Every note, every demand, always. And in 1797, France declared war on Britain. A small French force actually landed on Welsh soil, barely a skirmish in military terms, but the psychological shock triggered something far more dangerous.
Gold! We must have gold! To the bank, convert the notes! Real gold, not paper! Hurry, before it's gone!
The Prime Minister had a choice. Let the bank fail, and with it, the entire government's ability to fund the war, or quietly, secretly, suspend the gold promise entirely. He chose suspension. Without a public vote, without parliamentary debate recorded in detail, on a Sunday, by private order. The gold standard suspension lasted 24 years, 1797 to 1821. Most of the public never understood what had changed. For 24 years, British money was backed by nothing but trust in the Bank of England. And the Bank of England kept spending, and the war kept going, and the bills kept growing.
Here is what wars do to money. They make it infinite. Until they don't. The Napoleonic fend for its entire war effort and bulletinations of ordinary people who had no idea why bread was getting more expensive. Lending the government money, printing notes to cover the shortfall, watching inflation eat into the wages of ordinary people who had no idea why bread was getting more expensive.
But here is the pattern that will repeat itself throughout this entire documentary. Every time the Bank of England created money to solve a crisis, it stored up a different crisis for later. After Napoleon's defeat in 1815, the debt had to be paid. Britain returned to the gold standard in 1821, meaning the government had to claw back money, reduce the notes in circulation, and let prices fall.
Which they did, sharply. And the people who suffered most were not the bankers who'd issued the notes. They were the workers whose wages followed prices down.
200 years. That debt built in 12 years of war. 200 years to clear it. The Bank of England didn't create that debt.
but it made it possible. And when the Bank Charter Act of 1844 finally gave the bank a legal monopoly over all banknote issuance in England, meaning no other private bank could print money anymore, the architecture of modern central banking was complete. Chapter 4. The Empire's Bank. From London, the ghost network spread its invisible threads, binding the world in a web of capital and empire. Every shipment of cotton from India, every ton of coal exported, every colonial bond issued, flowed through the City of London. And the City of London flowed through the Bank of England. By the mid-1800s, Britain controlled roughly a quarter of the world's landmass and a third of its trade. Every one of those transactions.
But empire creates dependencies, and dependencies create crises.
This is what reserve currency meant before anyone used that phrase. If you wanted to do serious business anywhere on Earth, you needed sterling, and sterling meant the Bank of England. In 1890, one of Britain's oldest and most respected merchant banks, Barings, found itself catastrophically overexposed in Argentina. Argentina stopped repaying its loans. In 1890, one of Britain's oldest and most respected merchant banks, Barings, found itself catastrophically overexposed in Argentina. Argentina stopped repaying its loans. Barings was days from collapse. And if Barings collapsed, it would take dozens of other institutions with it, a cascade that could have destroyed the entire City of London financial system in 1890. The Barings Crisis, 1890. The Bank of England secretly organised a £17 million private bailout. It worked. The public never knew how close it came. The Bank of England quietly organised a £17 million rescue, coordinating private banks to cover Barings' losses before the public could panic. It worked. The crisis was contained. Most of the British public never knew how close the entire system had come to collapse. Sound familiar? The tools change, the architecture doesn't.
We are now at the halfway point of 330 years. Notice the pattern. A crisis, a private decision, a public rescue. The public finds out later or never.
And the system carries on, slightly changed, but structurally intact. This is not conspiracy. This is architecture. And architecture repeats. Chapter 5. The War Machine, 1914 to 1945. The world is engulfed in total war. Industry and finance fuel the conflict. On 1st August 1914, as Europe mobilized for war, the Bank of England faced a choice it had never faced at this scale. Fund a conflict that might last years. The government spent 3.5 times an entire year's national output on a war. In 4 years, the bank made it possible. The next generation paid for it. And then, just as Britain began to recover, came 1929. The Wall Street crash, the Great Depression. Britain struggled back onto the gold standard in 1925, and then abandoned it permanently in 1931, when it became clear that no amount of economic discipline could survive a global crisis of that magnitude. By 1945, after 6 more years of war spending that dwarfed even the First World War, the Bank of England was nationalized. The private bank, founded in 1694 to serve
Or let the financial system freeze while governments figured out how to pay for armies. Within 48 hours of war being declared, the bank had suspended legislation and with it being
the government while serving its investors, now belonged to the public, or rather, to the government. The question of whether those two things are the same has never been fully answered. Chapter 6. The Invisible Power, 1945. From the rubble of war, a new London rises. Decade by decade, the invisible hand of progress reshapes the city. Nationalized in 1946, government-owned, government-controlled, and yet the Bank of England's real power didn't diminish. Throughout the 1950s, 60s, and 70s, the bank operated in a curious in-between state. Its staff, its traditions, its secrecy, all intact. Politicians came and went, the bank's institutional memory stayed. The Bank of England did not publish its full accounts publicly until 1970. For 276 years, nobody outside the bank knew its exact profit figures. 276 years of opacity inside what was by then a public institution.
The Chancellor of the Exchequer, the UK's ministry.
In 1970, the Treasury publicly admitted it had no idea what the Bank of England's actual profits were. But here is the event that changed everything. September 16th, 1992, a Wednesday, now known simply as Black Wednesday.
The pound's cracking. They're betting big against it. Sell everything. The ERM is finished. It's falling. The speculators are winning. Double down. Sell more pounds.
The UK was part of the European exchange rate mechanism, a system that pounds the value against other currencies. Currency speculators led by a group of hedge funds concluded that Britain could not maintain that the pound would fall.
Currency speculators, led by a group of hedge funds, concluded that Britain could not maintain the pound's fixed rate. They began betting, in enormous size, that the pound would fall.
It's crashing. The pound is tanking. Get the desk. We need more liquidity now. The intervention failed. It's down 10%. By evening, the market will be in ruins.
Britain had crashed out of the ERM and the pound had fallen sharply.
Sell now. The pound is crashing.
The speculators one day made approximately £1 billion in profit
Buy the dip. We're making a killing.
at the expense of British taxpayers.
The bank spent $27 billion in one day, and still lost. The institution that had funded Napoleon's defeat managed 2 world wars and controlled the world's reserve currency for
150 years was beaten in a single afternoon by a private hedge fund. The architecture had a flaw. 5 years later, in 1997, the newly elected government did something the bank had never.
The Bank of England has been fully independent since May 1997. No elected politician can override its interest rate decisions. Chapter 7, The Crisis Architecture, 2007 to 2026. A ghost network emerges, linking global crises in a fragile web. The architecture of our time reveals itself. 2008, the global financial crisis. You know the headline. But here is what the Bank of England specifically did, and why it matters right now, in 2026. When the crisis hit, the Bank of England did something it had never done in 314 years of existence. It created money electronically, directly. QE Round 1, 200 billion in 2009. QE Round 2, 75 billion 2011. QE Round, 450 billion in 2020. Total created over 895 billion pounds. The question, and it is a genuine question, not a political one, is what happens when all that money eventually needs to come back out of the system? The bank has been slowly reversing QE since 2022. The process is called quantitative tightening, and it is, in effect, destroying the money that was created. The same architecture running backwards. Right now, in July 2026, the Bank of England sits at a decision point that echoes every major pivot in its 330-year history. Right now, in July 2026, the Bank of England sits at a decision point that echoes every major pivot in its 330-year history. Inflation above target, growth fragile, housing market under pressure, interest rates the highest since 2008. Bank of England base rate. Check current rate at time of publishing. This number affects every mortgage, loan and savings account in the UK. The old lady of Threadneedle Street, as the bank has been nicknamed since the 1790s, is 330 years old. And she is making the same fundamental calculation she has always made. How much money is enough? And who pays when the answer turns out to be wrong?
Every chapter of this documentary has ended the same way. A crisis, a quiet decision, a system that survives, changed but intact. That's not enough. That's the 3-video death set, and it tells us something important about what happens next, even across 30 years. 1. Central bank digital currency. The Bank of England is actively developing a digital pound, sometimes called Britcoin, that would allow it to create and distribute money directly to individuals, bypassing commercial banks entirely for the first time in its history. 2. The end of physical cash. UK cash transactions fell below 15/10. If that trend continues, the Bank of England's fell below to 20 painful. 3. De-dollarization. As we covered in our Bretton Woods documentary, the global monetary architecture is being renegotiated. If the dollar's reserve currency status weakens, sterling, which the Bank of England manages, could face a completely new set of pressures or opportunities. History does not move in one direction. The Bank of England has survived 11 recessions, 2 world wars, the collapse of an empire, a currency crisis it couldn't control, and the largest peacetime money creation in modern history. It has done so by adapting the architecture quietly, before the public noticed the change was needed. What it cannot survive, what no institution can survive.
30 years. One institution. One question that never changes. Who do you trust with the power to decide what money is worth?
If you want to understand how global financial power actually operates, not the headlines, not the hot takes, the architecture underneath, subscribe. Every week, one more piece of the system, decoded. The next documentary is already in production.